Good afternoon. Welcome to our presentation of the results of our research on Kiwi, a Russian payment services provider. First, let me introduce the members of Team A. Ludmila, Ripsime, Adam, Marat, and me, Ivan. So, Kiwi is an operator of the integrated proprietary network that enables payment services across physical, online and mobile channels in Russia and CIS. The company specializes in transferring funds from individual consumers to merchants. In May 2013, Kiwi went public on Nasdaq, and over the last 8 months, its shares skyrocketed by 200%. At the date of the report, 3 months average value was around $400,000. We believe that the company is overvalued. Accordingly, we recommend to sell Kiwi. At the date of the analysis, there was a 50% downside potential. Our target price is $25.6 per share. Generally, we have identified the following mispricing incentives. Firstly, a very good dynamics of payments volume in the past, which is not expected to be a long-lasting trend in the coming years. Secondly, an aggressive dividend policy during the periods of public offerings. It created false expectations about the constantly high future payouts and fueled the stock prices. Thirdly, a still weak activity of new market entrants. So, let's start with the business description.
The company was founded in 2004. It quickly created a widespread network of payment terminals across Russia, and then it started to expand its operations to the CIS countries and worldwide. Today, around 89% of the revenue comes from Russia and 11% from Kazakhstan and the other markets. Company's primary source of the revenue is fees received from processing payments. Kiwi has two principal operating segments, Kiwi Distribution and Visa Kiwi Wallet, which jointly account for the 85% of the revenue. Kiwi Distribution involves payments made via kiosks and terminals, which belongs to the independent agents. They are responsible for placing cash service in kiosks as well as the setting the fees rates paid by consumers. Kiwi Wallet entails payments made through virtual electronic accounts, which are topped up in advance. The wallet enables consumers to make payments with their consumers or mobile devices. In 2012, Kiwi signed a strategic agreement with Visa and got the access to the international merchant space. We identified a few red flags in corporate governance of the Kiwi. Firstly, there was a material weakness in the internal control in 2011. Secondly, Sergei Solonin, who is the CEO of the company, has currently a 40% voting stakes. As many important decisions of Kiwi require the approval by at least 75% of voting shares, the CEO is able to veto any resolution on his own. And thirdly, the management decided to break the 6-month IPO lockup period and went cash out to SBO in early October. And now let's turn to industry overview.
Russia is still a cash-dominated country. The proportion of e-payments is increasing, and now less than 70% of payments are made with cash. The share of payment terminals turnover in e-payments has been falling since 2008. It could be explained by the fact that people are steadily moving away from cash. Secondly, there are other payment options which have processed payments without consumer fees, preferred by customers, especially when they buy high-ticket items. And finally, the dramatically increasing popularity of the direct debit option, which permits automatic regular payments for utilities, mobile phones or internet. As a result, we expect that in the long run, terminal payments will be dominated by irregular transactions made by unbanked consumers to small merchants. In general, the industry is characterized by high availability of other payment options, very low bargaining power of suppliers, very high threat of subsidy products with low switching costs, low information and capital barriers, yet the importance of brand recognition, and last but not least, high market competition due to new market players. As to the industry competition, besides the established market participants like Kiwi, AlexNet and Cyberplot, a few powerful players recently came to this market. In 2012, Sberbank bought Yandex Money, and in 2013, Russian Post and Rostelecom announced their plans to launch the e-payment systems. All of them have a wide geographic coverage and strong state support. This may allow the new entrants to provide services at a lower cost. Now let's move to financial analysis.
Kiwi's revenue's compounded growth rate from 2010 to 2012 was 20%. It was driven mainly by an increase in the volume of payment in Kiwi Visa wallet, with compounded growth rate of almost 140%. However, this growth in revenue is not likely to prevail in the future, mainly because of an increasing competition in the market. Even though Kiwi's liquidity ratios have been traditionally low and will remain so in the forecast period, we do not expect that it will have serious impact on the business activities due to strong operational cash flow and high debt capacity. Based on our financial analysis, ROE will reach the maximum point in 2016, being driven mainly by a high leverage ratio and a net profit margin. After that, we expect net profit margin to stabilize and asset turnover and leverage ratio to decline, bringing the ROE down. In the third quarter of 2013, the payout ratio was 97%, which positively influenced the stock price and allowed selling shareholders to maximize their profits during SPO. We expect the payout ratio to decline to an average historical level of 82%. On the other hand, strong cash flow from operation may allow Kiwi to pay stable dividends in the future. And now let's move to the valuation part.
When evaluating the company, we used both DCF and relative value approaches to derive the fair value of Kiwi shares. Since Kiwi intends to become a worldwide electronic payment operator, we constructed a representative group of peers from the companies which conduct businesses in different regions of the world. Since Kiwi business is particular due to agents model application, we decided to use EV to EBITDA multiple as it's unaffected by the capital structure and depreciation and amortization charges, and PE ratio as another supportive proxy. As a result, we got fair value of $20.9 per share that implied 59% of downside potential at the date of the report. In addition, there is a case of Evertech Incorporated, a global peer of Kiwi, which provides transaction processing services in Latin America. It went public in April 2013. Given many similarities, Kiwi's stock price appreciation of 200% looks unreasonably high relative to the 27% for Evertech. This additionally suggests that Kiwi is more expensive relative to the market. Within the DCF approach, we used free cash flow to firm model. The terminal value was calculated based on the EV to EBITDA exit multiple. The cost of equity was adjusted by the company's specific risk premium that had been derived according to the Deloitte and Touche methodology. Final weighted average cost of capital is 12.6%, which is in line with the 12.5% discount rate used by Kiwi in December 2012 in its own stock evaluation. The free cash flow to firm model identified the fair value of Kiwi shares as $30.4 per share. In order to derive the final target share price, we assigned equal weights to DCF and relative value approaches. Our target price for Kiwi is $25.6 per share, implying 50% downside potential at the date of the report. Now let's move to the investment risks.
According to our analysis, the main risks for the company are following. Regulation risks in the short term. Introduction of new regulation in Russia affecting Kiwi's core business activities could have negative impact on company's financial position and its profitability in future. Thus, recently proposed law, which imposes severe restrictions on anonymous payments in Russia, made Kiwi stock price dropped by almost 30% within 3 weeks. Second, rapidly growing market competition as new powerful players came into the industry, which are larger companies with greater financial resources. And finally, increased usage of cashless payment options. Alternative and cashless payments instruments are steadily growing in use, so the distribution part of the Kiwi's business is going to shrink. And the main challenge for the company is its ability to retain kiosk customers as new e-wallet users. Let's proceed to our conclusions. Based on our research, we recommend to sell Kiwi. We believe that company's earnings quality is good, but the future prospects of the Kiwi are significantly overestimated. The time of cash payments has already passed. In the last 3 weeks, Kiwi stock price dropped significantly. In our opinion, this is a turning point when the market participants should evaluate companies' potential and lower the target prices. As of the 29th of January, the downside potential is 28%. Thank you for your attention.